Well, good morning. How's everyone doing? We have a very interesting day today. I'm liking our range. I'm liking the price action. I don't like that we're inside the previous day range, so I'm looking for us to try and hopefully break that. But even if we remain in it, we should have some good trades inside the range because that 8:30 news driver was really nice. Boost higher, takes out some buy side. I'm relying on 9:30 today. I don't know if we're gonna run lower, take out pre-market low, maybe take out some relatively equal low to the downside, or if we're gonna find support here and then just run up. So my entire bias and narrative will come from the opening range gap, not from, well, price action as well, but I'm not seeing anything clearly here that tells me we're gonna move one side or the other. So we're inside. Well, yesterday was an outside candle, took out the previous day high and low, but that was a small range day, so it doesn't have as much of an emphasis on how we treat outside days regularly. We have a previous day high, previous day low. We've rejected the upper quadrant of that wick, rejected the bounce price range on the high time frame. So I'm hopeful that we can try and move into the previous day high. The current low of the day is also a level I'll keep in mind. 111. And you can look at this volume bounce not as a draw but as a level you want to see it run up into and find support. So I'll keep that on. Morning, Zach. Yeah, I had to change the title because it was a bit cocky. Yeah, nothing super clean on the 4 hour. We're still in 1 hour market make buy model, but we've had a very prolonged period of consolidation. Of course, this is courtesy of our just terrible economic calendar this week. That's okay, we can deal with that. It's nothing that we can't handle. Like, very messy price action. I realize my chart is full of annotations, but even if you look at a clean chart, just horrid price. Horrid. Oh, that's the new opening gap from fault. Just huge hurdles of consolidation. This was a nice volume spike from the 8:30 news, so really it's not that I'm disregarding this price action, but none of it is salient or helpful in determining where we're going to go next. Morning, Kevin. So just like how we talked about silver mentorship, the first reference points that we can use at the 9:30 open, pre-market high and the pre-market low. When you do have a bias, when you don't have a bias, when you're lost, these are the easiest, like, first reference points that you'll see. See, this was the final gap, the Fair Valley gap, before stops were taken. Well, at the end of the run after stops were taken, if that makes more sense. What's up? Y1M, what's up? Like the stream. Nasdaqistan. Hope I forgot to open the New York AM chat. There you go. How much is your rent there? Oh, you're asking me. Okay, settlement price is 275.75. Regular trading hours settlement price. Damn, it's gonna be a large opening range gap then. Very large. Take a quick peek at ES. Just gonna extend out a couple of opening range gaps on ES. Sneeze. This off. February 6th. Oh, I thought we might have had a VSP there, but we don't. Okay, it's a really clean run lower at the moment. Up close candles providing resistance to the down close candles, which is another way of saying bearish order blocks are delivering price lower. Just like that. Full port shorts. I don't know about full port, but maybe. I think when we're seeing such a controlled demolition like this, the only thing in your way is optimal trade entry. So, right here. But like, if we can breach the pre-market low and then see a strong close below it, like a liquidity run, not a liquidity sweep, then that would actually be good because we have a lot of low resistance liquidity to the downside. All of this here is low resistance. And a run even as far as the Asian low or even the previous day low, yeah, I can see that happening. But this is what I consider London low. London low. Retracting, retracing the data move, data lows, and oh yeah, we have a data low as well. I forgot about that. Well, there you go. 9:30. Do I hear Black Bell? Ooh, we'll see. Don't rush in. You have to wait to see if it's a sweep or not. And if you miss it, then you miss it. Yeah, I just checked ES. That's why I said to not run in, because even though there's an S&T, you can't chase it. Okay, this is not a liquidity sweep yet because that's an indecisive candle. So it's done work on the sell side, yes, but it's also run to the buy side and rejected. So I would still wait to see something that resembles support. We have enough range to work with. If you want to trade the black bell, you shouldn't be forcing an entry down here because it's not entirely obvious yet. So wait for it to show you that it's willing to trade into the range, because remember, we have the opening range gap against us. On the regular trading hours chart, if you're looking at a black bell right now, you're looking for higher prices, but we have an opening range gap, a premium gap. A premium gap will look to go lower. So you have to be looking at, is it going to fail down to the consequent encroachment? Is it going to give a full gap closure, or is it finding support from one of these levels? I don't need that, to be honest. I'm going to take that off. ES, 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 ES. ES doesn't even go into its lower quadrant. Sorry, its upper quadrant. NQ did. So, but NQ is the one that took out the low. So that means ES is going to be the distribution asset that should trade further, generally. Still a little indecisive on these two candles with the longer wicks. So you want to see something of a full body that starts to leave this range, and that's when we can look at, okay, potential black belt. 5 minutes suspension block. Oh yes. Oh yeah, really nice suspension block. I love suspension blocks. Okay, that's ES's pre-market high. This is nice on NQ. So far, I'll still wait at least one more candle, because this, in my opinion, isn't perfect setup just yet. Not just yet. Okay. Oh, I just had a straight shot off. Got discounts. That's pretty already though. Yeah. No first presented fair value gap yet. Unfortunately. Back below 930's opening price. It's not great because for black belt you want to see immediate runs, like immediate displacement, and this is already gone against that. So I like that it dipped low. I need to see it reject here and then make this a bull shoulder block. This dip low is actually a very good sign, because if it does that and it rejects it, it's generally a sign of discount sensitivity, because remember, this is 930 opening price. And if it's rejecting that, then the only reason it went down below 930 is to get a discount price before it runs higher. It's decoupled though, because YMs are running for the horses. That's not the saying, is it? How do you say it? I don't know. ES is a bit in the middle, and NQ is the weaker asset. That's generally how it is. If you see NQ really strong, in the decoupled market, it's usually YM that's really weak, and then ES is in the middle. Or NQ is really weak, YM is really strong, and ES is in the middle. I say that all the time. Yeah. Below February's midnight opening price, and below 9:30 opening price. NQ is a 15-minute civvy on the 9 AM candle, very visible below 9. Below baskets away. Oh yeah, that's true. To be honest, I would put more emphasis on the fact that we've expanded out this range. You know, we have this inversion suspension here. It's not an inversion suspension. Inversion fair value gap. You can see support from there. That'll be good. A change state of delivery here that is stronger, not like some little pathetic thing. A strong one here would be very, very nice because we're just stuck in this area where it's back and forth, and you don't really want to be trading those. Still no first presented fair value gap, but I'm liking that. Also, you have to wait for the candle to close before it's actually changed state of delivery. Just preparing the annotation just in case it is. If it rejects, that'll be annoying. Because then it's likely to just flip and do the complete opposite. Ah, Nasdaq. Not a change state delivery, unfortunately. That's very annoying because it looked like for a moment it was about to break out and just run with a solid bodied candle, change state delivery on this candle, and then start running. But because it hasn't, we're back inside this range, and when we're in this range, you can't really decide on the bias because it's so balanced. There's nothing inefficient on either side. It's already taken out liquidity. It's got an opening range gap consequent encroachment below it. So it might reach for this. This is the only real draw. The downside. Just bad price action. You can't really read that. OTE though, if it goes lower. True, and it has total slipped as highs. Okay, ES is a lot cleaner. There's no, insane wicks either side. YN's recovering. So it really was very reluctant to leave this new day opening gap. Very reluctant. Still doesn't want to leave it. Interesting. Take this off, and if you study this per price action, this whole thing is a balanced price range. You can't really, and it's not a clean balanced price range, or there's like two really nice wicks, or there's two overlapping inefficiencies. It's balanced because it's just sharing the range constantly, and still refuses to leave the range. Just won't leave the range. You can't try and take a trade in this segment of price action. It has to leave there for you to be able to decide on a direction and on a trade if you're willing to take a trade. Now, this is the first sign of, terrible price conditions. You don't want to be pushing a button here. Even if you're looking at a black bell, even if you're looking at whatever, there's no signs of algorithmic respect. It's just very clogged and muddy, where every candle is sharing the majority of the previous candle's range. Every time it wants to leave the range, it gets rejected and smacked back down. So sit on your hands and chill. Yeah, it's to pre-market high. Yeah. That's an S&T. Above midnight price. My expectation now would be ES runs for the pre-market low. And consequent encroachment. But NASDAQ, I wouldn't try and call the specific point it's going to reach down into. Obviously, we have these lows here, which, these are the likely ones. But it's so messy until these are balanced price range, I can't really decide. And really, obviously, this has a correlation with ES, and it's lower probability to predict, even if you're predicting ES. If we're in this balanced price range on NQ, until we leave this, it's going to stall or ES's progress because they're correlated. See, that's a good sign because that looks like the beginnings of what could be a breakaway gap. Yes. She's starting to run. Consequent encroachment. And this would be first presented. $9.40, first presented order block. I wouldn't, because it's just in the consolidation, so I wouldn't look at that as a strong order block at all. No. Okay, NQ has reached into the consequent encroachment of its opening range gap. What's the next pool of liquidity? It's this low, which is London low. Yes, London session begins at 2, but it's extendable to 1. And in this case, because the move kind of bleeds out of that 2 o'clock hour, I would use the 147 low at 25,292. Ideally, this is a breakaway gap as well. It doesn't return into it. Because this candle, the 944 candle, trades all the way through with a solid candle below the pre-market low, it's more likely to continue without trading up into this first presented fair value gap. Let's land on low. ES still running lower, hasn't quite taken its pre-market low yet. I think it should go at least to here. That's a full gap closure on the opening range gap, which if you look at your regular trading hours chart, just means it's filled in that void. That's all that means. And that is most of this low resistance liquidity taken. All of the low resistance liquidity taken. Nice. Okay, the Asian low could be next, but this is enough. It doesn't need to go even lower and take out this low of the previous day low. It doesn't need to do that. So from here, it could potentially reverse. Like, you know how we talk about silver bullet, where's it going to reverse from? Obviously, you have to interpret the liquidity event, but from narrative, this is enough liquidity. It doesn't need more. It can go for more and then reverse, but from this point is where you can start to predict reversals. It can begin to occur from this low. So, with that in mind, do we see anything in price action that would support that idea? Currently, no. If we can invert, nah. There's no significant fair value gap here that would be strong enough to consider an inversion. This is a gap, but it's a common gap. It's not a strong one. And even if we can invert this gap, I wouldn't consider that a strong enough sign for a reversal. So even if that becomes an inversion, nope. That's not valid for a reversal. If this one does, then yeah. But by then you've lost a lot of the move. So it looks like you're more likely to just leave that. Okay, that's pre-market low on ES as well. Yeah, opening range gaps are amazing. 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 Okay, if you want to talk about first presented order block stack, that would be what I use. 946. Yeah, it's respecting the open range gaps so far. Yes. Yes, it is. And you have an order block, or what's about to become an order block, hopefully, overlaying the upper quadrant of that. Well, we'll see if it becomes an order block or not, but if it does, it's a very strong PD array because it's overlaying this quadrant on the opening range gap. Okay, not quite an order block, so I'll take that off. Probably about to be, because it's got a nice bearish volume bounce there that can react off, but isn't technically an order block yet. 11th of February's new day open gap. There's the Asian low. Beautiful price action from 942 onwards. Now hopefully, if you look at the daily chart, we have a previous day low here. So, alright. Oh, I was looking at the intraday low. Okay, all an intraday low is just the current day's lowest low. Doesn't mean the previous day high and low. Just means the current day high or low. It would be nice if we can run into that, but again, just be content with this move. Take that off. Such a brilliant, brilliant morning. Wonder why price somehow respects all these random lines in the chart. Isn't that interesting? Rejects the high of that order block. Now you can look at this wick that I rejected from, and you want to see this candle that we're currently trading in reject ideally the lower half of that wick. The wick that rejects a PD array, if it's an elongated wick, those are the ones you want to see respected by the following candles. Respected just means ideally doesn't breach the lower half. And that can be very indicative of weakness. Okay, it did, but it's a weak close. When I say it rejects the lower half, it does reject it, but you can see how when it closed and the next candle opened, there's also a bullish volume imbalance. It doesn't invalidate it, but it makes it a lot weaker. Well, it makes the idea that it's going to trade lower a lot weaker, not price action weaker. Okay, this is of course S&T now, because ES hasn't gone anywhere near the Asian low, whereas NQ has obliterated it. So even if both are going to be bearish, because it's an S&T after a lot of liquidity has been taken, it still provides a small run up. Even weak S&Ts can do that. When you apply that to the daily chart, it'll give you a couple of days of upwards price action. But on the 1 minute chart, it gives you a couple of candles. It's only a couple of minutes against your price run. And it can be hard to hold through, but you should just farm it out. Still respecting the order block. can change the state of delivery here. That makes this a propulsion block, and that would invite a lot of speed. So that's what we want. Enough speed to take out the intraday low. Just enough speed. There you go. Plus a breakaway gap. Even nicer. Oh, just ticked it. There you go. Bullshit, you get that fill? No, I'm not in a trade. Yeah, probably the new week opening up as well. Oh, but that's so hard. I thought you meant bullshit. I thought you were abbreviating bullshit, but I don't know why. Oh, yeah, yeah. True. And Q keeps knocking these off. The 2035 breakaway projections. Projection. New week opening F5. Are you starting from this price run? I'll assume you're starting from here, because that's where you should be starting. We'll go 25 on CE. Really? My projection doesn't show the new week opening gap high. Where are you anchoring it to? Unless you did like that. I don't know. I wouldn't use that in this case because we just have such an obvious draw lower that I'd probably use a measuring gap if I had to use one. So say this is your implied range from this high to the new week opening gap high, but there's no fair value gap that you can use. So yeah. Full gap closure on ES. About time. The S&T really performed. Really performed. Okay, I'll probably expect... Nah, because retrace after taking the low. Yeah, you should be content with this already and not demand the new week opening gap. I think it will. Probably this will be a fake run and it will go into the new week opening gap. But this is something to be content with. Make sure you paid. Again, no bullet for me. Silver bullet. Do you only trade the silver bullet or do you look at like price action as well? As in just trading the order flow? To objectify my trading even more. Objectify your trading, okay. Yeah, fair enough. For me, I can't limit myself to one model. I have to have multiple because when I did try to just use one model and I was just doing, years ago, and I was just doing optimal trade entry, all I would do is wait for a liquidity sweep at an optimal trade entry level in a bullish environment. So sell side liquidity gets swept at an optimal trade entry level, and I would buy that with a 2 risk reward ratio. That's all I did. But the setup was a bit rarer, and I would take like maybe one a day, and I didn't have a specific time I could be at the chart and expect that setup. So I kept that under my belt. It's not like I completely forgot about it, but I added to my repertoire. So then it became, here's a pattern revert type setup. Here's a classic buy sell day. Here's a market maker model. So I had to add more tools to my belt in order to not bore myself to death looking at the chart and not having anything to trade off of. So that way, in any session and in any type of price condition, I could trade. And now I can trade consolidations. Not that I do, but I could, because I have models for that. I can trade one-sided markets that are just one-sidedly running up. I can trade purge and revert type markets. I can trade within a range. I can trade when we're leaving a range and we're in a discovery phase. So although you're sticking to the silver bullet, and that's a good thing because you should master one thing first and then expand your horizons. If you're not seeing the model form, you can look into other things that complement the silver bullet or that go with the silver bullet, or say another New York model, either the black bell or a continuation model, lower, whatever, an opening range gap slash 2025 model. It's just good to have under your belt because then at least that way you're looking at the session and you're getting something out of it more than just I can only look for this sub, and if this isn't there, then I'm not able to do anything. It's good initially because it trains discipline and stuff, but eventually you want to evolve out of that to having multiple tools where you can just go in and most New York sessions, as long as they have decent conditions, are going to offer you something. I did trade in general MXM also because it gives one side of institutional overflow usually, but I look for pattern environment before I enter. Well, if you're trading inside inside a market make buy model, say you're in a lower, you in fact, we have one of the hourly charts, a little better example. Every single continuation still involves some kind of purge and revert. It's just here you think there's no purge, but then actually on the lower time frame there is something there. I wish we had bad price conditions so I could give a good example, but like this would not be considered a typical purge and revert model. It's retracement and expansion higher, but it's still purging out lows before running higher. So even continuation models are like forms of purge and revert models. So with a silver bullet, even this run lower, this is a silver bullet. It just took out this high, these highs, the opening range, 9 a.m. opening range highs, tail sweep those with an SMT and ran lower. So it is a silver bullet, it's just not, you know, maybe your typical example of what a silver bullet would look like. But also bullets are going to be part of a market maker buy model. So if you have a good understanding of market maker buy models, it complements any model that you do, literally all of them, because it's always going to move in either MMXM or if you're not using MMXM, a swing grading type move. So it's always going to be moving according to swing grading. Swing grading being say we're in a trending market, you're not going to see your market maker models form as much. Now they will form, but it will reverse out to a trade entry instead of taking out the original consolidation. But in your trending market, you want to see the swing grading aspect applied. So you want to see displacement through the lower quadrant. Generally, it's going to be consolidation at the equilibrium. Sweep the equilibrium and run higher. Usually, it should not even respond to 0.75 in a trending market. Doesn't actually need to sweep the consolidation. A lot of times it will, but if it's super strong, it'll just expand straight out of it and then come back down into the consolidation, into some kind of order block within this, and then run higher. Or it will just sweep it low and then run higher without even needing to return to the consolidation. That's swing grading in a nutshell. There's a lot more to it than that, but if you understand that and market maker models, you have a huge, huge advantage in your trading because all of your models fit into that. All of them. And if I grade this price swing right now, price swing right now, implied range, where's the consolidation occurring? Equilibrium. Where is it displacing through? The lower quadrant displaced through. Breakaway gaps are forming there. And consolidates at equilibrium. You may see this as a retracement. Retracements are just forms of consolidations, so still displaces through the final quadrant in the range. Super important to set up can present before you to trade. We're interested in because yes. If you point out the 9 a.m. opening range again. Oh yeah. 9 a.m. opening range is just I teach this in the pre-market model. See, these are all opening ranges that we use in the pre-market model, but the relatively equal highs and lows that form in the pre-market ranges, not the highest high and the lowest low, the relatively equal highs and the relatively equal lows that form inside of this. So here there's no relatively equal lows, but there are relatively equal highs in the 9 a.m. opening range. Again, not the highest high, the opening range, relatively equal highs, which is this high and this high. It tail sweeps that with an SMT and then runs low. So that's what I mean by the 9 a.m. opening range. 9 o'clock to 9:30 is an opening range. Every hour, the first 30 minutes of every single hour is an opening range, but it's particularly amplified in the pre-market range because that's when the algorithm turns on. If you're doing it from 6 o'clock to 6:30, you're going to have terrible results. But if you're doing it in the pre-market range, then you have good results. Shows the end test kind of open, so yeah, I get it. These are random levels, so. Alright, so you can see the 9.8 candle giving manipulation AMD. Yeah, yeah. Definitely. Or that S&T was really nice. Really nice. Okay, that's bearish order block followed by a fair value gap on ES. Should be a strong reaction there to keep drilling this lower into that Asian low. Same on NQ, we've already taken out the Asian low and the intraday low. We have the new week opening gap as a draw. So any run higher, you want to see that be failing to run higher and then keep dropping. Every hour has opening ranges, interesting, yeah. Actually, remember, it's actually every hour. But in the pre-market, those are like the nice tradable ones. But it is every single hour. But opening ranges are relative as well, which is something 99% of people don't understand. They're relative, so now we're not going to talk about that here. That'll be saved for something else. That's too much sauce. I'm just waiting for the new week opening gap to deliver. I'll probably end stream. More sauce, please. To be honest, the opening range source, it wouldn't help you if you're trading silver bullet. And for most models, it's not going to directly help you. It's just going to help you with your bias and draw on liquidity and understanding of price action in general, but it's not going to directly relate to your model. It's just going to be the general order flow reading, which is, I guess, does help your model, but not directly. I've been studying opening ranges a lot. Hours and hours a day. One day I'm just gonna stop, like, trying to figure new stuff out about the market and just chill. But for now, there's still a few more things I want. Okay, we have a nice Sibi here. If it can invert this, I would look for a move into this Sibi, this breakaway gap. If it fails to invert this, and it fails to close above this strongly, which is how an inversion fair value gap is, then it's, just going to deliver into the new week opening gap. I would rather it delivers into this first, before we start to see inversion setups, because otherwise it kind of conflicts with the move. I don't like it. So, Sibi. 2-minute Sibi. It's previous day London closed to new day London open. Anything ICT taught? No. I don't think so. I thought you were referring to flat for a second, but it's definitely not flat. London closed to London open. No. Let's take a look here. I would like to see this reject, to be honest, and then go into the new week opening gap. But if it does become an inversion, likelihood is it takes out this high, goes to the CB. Oh, yes, is a lot stronger. A lot stronger. It's a suspension block on ES. Do you watch trading podcasts? No. I would never watch trading podcasts other than ICTs. To be honest, I'm not interested in people's opinion of the market. Even ICT derivatives, people that trade ICT, they all for some reason like to shit on him, and whatever. I don't care that they shit on him, but it's just they use his concepts and then they deny the reason the concepts work. Like, there's no algorithm, it's just whatever. And I don't know, I think it's insufferable to listen to them because they all have the same opinion, they all say the same things about the same subjects, and anytime you listen to one of those people talking, it's like they're clones of each other, and I hate it. I find it very, not cringe, but it's just like they all have the same personality, and I don't find it interesting to watch, to be honest. Even when I was talking in Kit's Trader Roundup, everyone that said, or that came to the stage, mostly made the same point, except for like a couple people. Or they just like to hear themselves talk and said something completely irrelevant. That probably sounds like narcissistic or egotistical, but that's just my opinion. What did you talk about? I spoke about making ends meet with very little size instead of trying to go into the market with the idea that trading needs to be numbers flying across your screen. It can actually be very comforting and smooth. You only really need one or two or maybe three micros to make quite a lot of money. So that's what I talked about. And I said to be content with enough. What is enough? Enough is whatever makes a difference in your life. Doesn't need to be 6 or 7 figures, just needs to be what takes away stress and allows you more mental capacity to remain in the game rather than completely eliminate your job instantly. Whilst that's a good goal, you have to accept first that you won't be able to do that in 3 months. It might not be done in a year. You have to accept that, okay, I have something that can ease my stresses from real life expenses. So I can work towards eliminating my ends or making 50% of my ends from trading using very little size in a comforting way where it doesn't give you, you know, the tendencies and the pitfalls that you can fall into, like over trading, over leveraging, FOMO. That all comes from wanting more money, really. And when you accept that you don't need money from trading, obviously we all want money from trading, that's why we do it. But when you don't have the eager desire to go in there and just push and push and push until you max out and you want to get a 6 figure goal achieved in a month, it isn't realistic. So you have to wind down and consider what is realistic. Well, the first step to getting to whatever your end goal is has to be smaller, and it has to be something like working towards eliminating your monthly expenses. And to do that, you have to first take a chunk out of those monthly expenses. So, like a first profitable month for a trader should be like, okay, what are my expenses at the end of the month? Say it's £1,500 or dollars, rather, because most of you guys are American. $700 that month from your trading income would make a big difference. And then the next month, maybe then it can be $1,500, and then maybe it can be $2,000, and then it starts to really compound, but it has to be given time. Yeah, got to bench the bar without the weight. That's a gym goer's way of saying it, yeah. Overtraded with too much size, way too much. It's not nice to feel like crap after one of those. Yeah, I hate. It's the worst. It's the worst. But if you really actually limit yourself to 1 or 2 or 3 micros, you realize that you can actually make more trading 3 micros than you can over leveraging with 3 minis. And you just do it a couple days consistently, and you might go for $200, and then you end the day with $400 one of those 5 days in the week because it's a really beautiful price action. So as long as you're keeping yourself out of these types of conditions and you're getting in on these types of conditions, which admittedly easier said than done, but it is a transferable skill. Anyone can learn that. Just takes time on the chops and experience. Okay, it's stalling here. I don't know if it's gonna really make a break or if it's gonna just get held up again. So I will end the stream here and we'll be back tomorrow. Thank you for listening. Hopefully it was of value. And yeah, tomorrow CPI Friday. See everyone then, and we can enjoy a weekend with the Black Belt Lecture 6 on Sunday, most likely. So thank you for watching, and goodbye.